Hey everyone, welcome back. Ready for another deep dive? Today we're tackling something that's both shiny and apparently pretty valuable, especially when things get a little rocky in the economy. Gold.
Yeah, gold. It's always had this sort of mystical allure, hasn't it?
Totally. And we're going to try and unpack some of that mystique today,
Mm,
right?
good.
We're going to dig into why it's seen as this safe haven asset, how to even invest in it, all that good stuff.
Sounds good.
Perfect. Our compass for this journey. A really interesting article we found from Lumis Capital. It's called Why Gold is Considered a Safe Haven Asset, and is just published on November 5th, 2024.
Oh, nice. Very recent.
So if you're listening and maybe you're thinking about adding a bit of sparkle to your portfolio, well, this is the deep dive for you.
Okay, so gold. It's been around forever, right? It's had this reputation as a store of value for centuries, like way before we were even thinking about stocks and bonds.
Right. It stood the test of time.
Exactly. And unlike currencies, which are, tied to specific governments or economies, gold has this inherent value, you know?
Oh, totally. You don't have to worry about, like, the dollar crashing or whatever if you've got gold.
No, it's not that simple, but yeah, it has this tangible value. It's a real thing. You can hold it, you can touch it.
Yeah, which is interesting because a lot of the assets we talk about are, like, completely digital.
Yeah, exactly. And that tangible aspect of it, it kind of transcends borders and time. It's always been valuable pretty much everywhere.
It's fascinating that gold, unlike, say, a stock in a tech company, holds its value or even goes up when inflation is soaring or the economy is taking a downturn. Why is that?
That's a great question, and it kind of gets to the heart of why gold is seen as a safe haven. Imagine inflation is high, like really high.
Like groceries are suddenly 3 times as expensive.
No, exactly. Your money just doesn't buy as much anymore. Its purchasing power shrinks. But gold's got this finite supply. There's only so much of it on the planet. And because of that, and its history as a store of value, it tends to hold its worth even when paper currencies are, losing their grip.
So it's almost like having, I don't know, a reserve currency, but one that's recognized everywhere.
Yeah, kind of. You're not tied to the fate of a specific country's economy. Look back at history, and you'll see this pattern play out again and again. Wars, political turmoil, financial meltdowns during those times. Gold either held steady or, in a lot of cases, even increased in value.
While other things were just, like, plummeting.
Exactly.
Okay, so it's not just about, like, looking pretty. It actually serves a purpose in a portfolio,
Yeah.
especially when the world feels like it's going a bit haywire. I'll admit, though, when I first started learning about gold as an investment, I kind of pictured myself, buying giant gold bars and, like, hiding them under my mattress.
Uh-huh, yeah, that's a classic image. Fortunately, you don't have to go full pirate to invest in gold.
Thank goodness for that.
Right. There are a lot more practical ways to get exposure to gold. Let's start with the traditional option, physical gold.
Okay, so we're talking about the actual gold bars, right?
Yep. Gold bars, gold coins, even jewelry. You own it outright, it's tangible. That's the big advantage.
Yes, the downside is you have to figure out where to keep it safe.
Exactly. Storage is a big consideration. And insurance, too.
Makes sense. So what are the options if someone isn't quite ready to become, like, a modern-day treasure hoarder?
Well, there are a bunch of modern approaches that let you tap into gold's value without actually having to, lug around gold bars.
Sign me up.
Right. So one of the easiest ways is through ETFs, which stands for exchange traded funds.
I've heard of those, but I'm still not exactly sure what they are.
Think of them like baskets of assets. And these baskets are traded on the stock market, just like regular stocks. The cool thing is, ETFs can be designed to track all sorts of things, including the price of gold.
Oh, I see. So instead of buying a chunk of gold, you're buying a share of this, like, gold tracking basket.
Exactly. And because it's on the stock market, it's super easy to buy and sell them. Then you've got mutual funds, which are kind of similar. Basically, they pool money from a bunch of different investors and use that money to buy, a bunch of gold-related assets.
So you're not picking individual stocks, you're kind of getting a pre-made gold mix.
Exactly. Diversification built right in. And they're pretty liquid, too, meaning you can easily buy and sell your shares. So both ETFs and mutual funds, they offer this more convenient, more accessible way to get into the gold game.
Got it. And the article also mentioned gold mining stocks. Are those kind of like gold ETFs?
Not really. With gold mining stocks, you're investing in, you're putting your money directly into the companies that actually find, mine, and produce gold.
Okay, so you're betting on the companies, not just on gold itself.
Exactly. Now, these stocks can potentially offer higher returns, because you're directly invested in the company's success. But they also carry more risk because, well, if the company doesn't do well, your investment might tank, even if gold prices are doing great.
So there's a bit more of a gamble involved.
Yeah, exactly. It's kind of like, imagine you're at a horse race. With gold ETFs or mutual funds, you're betting on the entire racetrack. With gold mining stocks, you're picking a specific horse. It could win big, but it could also lose.
That's a great analogy.
Yeah.
Now, even though gold is considered a safe haven, the article, it kind of cautions against going all in on gold. Like, don't put all your eggs in the gold basket, so to speak. Why is that?
Yeah, and it's a really important point. Gold, it provides stability, it helps hedge against big market swings, but it doesn't generate income the way that, say, stocks or bonds do. Those can pay dividends or interest.
Right, so it's not like you're earning something on your gold just by holding it.
Right. It's more like, think of gold as the ballast in a ship. It helps keep things stable. It helps you ride out the rough seas, but it's not the engine that's actually propelling you forward.
It keeps you from capsizing.
Exactly. You still need those engines, stocks, bonds, other growth assets to really move your portfolio in the right direction. The article suggests keeping gold to maybe around 5% to 10% of your total portfolio. That way it complements those higher growth assets. It helps smooth out the bumps along the way.
So it's all about balance, finding the right mix for you.
Right, exactly. Too much of any one thing, even gold, can be a bit risky.
Now, a lot of people might be wondering, is there an ideal time to add gold to a portfolio? Like, is there a magic moment?
Yeah, the million-dollar question, right? The truth is, trying to perfectly time the market is really, really hard, almost impossible, really. Nobody has a crystal ball.
So don't quit your day job to become a fortune teller just yet.
Definitely not. But here's the thing. There are definitely some economic signals that can give you a hint about when gold might be especially valuable.
Okay, like what kinds of signals?
Well, for instance, when inflation is going crazy, like we talked about earlier, that's when gold starts to look really attractive because it holds its value better than currencies, which are losing value due to inflation.
Right, so if inflation is a storm, gold's your umbrella.
Uh-huh, I like that. Another signal is low interest rates. When interest rates are low, the opportunity cost of holding gold, which doesn't generate interest, remember, it goes down.
Oh, interesting. So basically, it's less tempting to chase those higher interest rates elsewhere when they're already so low everywhere.
Exactly. And then there are times of, global instability. It could be geopolitical tensions, wars, anything that's making people nervous about the future.
So basically, whenever the news starts feeling like a disaster movie,
Kind of, yeah. Investors tend to flock to gold during those periods because they see it as a safe haven, a way to protect their wealth when everything else feels shaky. And when demand goes up, of course, the price tends to follow.
it all makes sense. So if I'm hearing you right, it's not really about trying to time the market perfectly with gold. It's more about having it there as a sort of long-term strategy.
Exactly. Don't think of it as a get-rich-quick scheme. It's more about having a stable asset in your portfolio that can kind of help you weather the economic storms that inevitably come along.
Bit of peace of mind. So to recap what we've learned today in this gold deep dive. Gold, it's a valuable asset when you're thinking about navigating uncertain economic times. It offers this stability and a potential shield against inflation. And we talked about how many different ways there are to actually invest in it, from physical gold to ETFs and mutual funds, and even gold mining stocks.
Right. And maybe the most important takeaway is you've got to find that balance. Diversification is key. Gold can be a great part of a portfolio, but it shouldn't be the only part.
Love it. Well, as we wrap things up, I encourage you to really think about how gold, even a small amount, could potentially fit into your own long-term investment goals.
Yeah, it's worth considering. And it's fascinating to think about how gold, this element, this metal, has played such a crucial role in economies and, frankly, in human history for so long. It's more than just an investment. It's this symbol of value and stability that's resonated with people for centuries.
Absolutely. And for those who want to dive even deeper, the Lumis Capital newsletter, which is mentioned in the article we used for this deep dive, offers some really great insights on investment strategies and kind of the broader economic trends that are shaping our world. Knowledge is power, right? Good luck on your financial journey, everyone.